The Indian consumer is very well aware of EMI. So EMI is a big driving theme in all of retail and services today. And it's almost become essential if you're a college, if you're a retailer, if you're a manufacturer, to offer EMI. You need to offer EMI to your customers, and we're sitting in the middle of that. So I think the trends are, number one, unprecedented growth. There is absolutely no end of demand. But then linked to that, number two, a real price sensitivity. So it's important to get the pricing right for the market and for the different markets, and make it as affordable and transparent as possible. And then I think the third theme that we're really seeing is a lot of customization and personalization of your product for your market. And what do I mean by that? A lot of growth is coming particularly from tier 2 and tier 3 cities where credit cards did not reach. And that's where you need to have a lot more local understanding and also build collections infrastructure and communication infrastructure that speaks to that local market. I'd say a couple of things. One is we use a lot of data that we obtain directly from the customer or data that we work out through his behavior with us. Things like how they interact with our form, what time of day they come to us, where they came to us from. Was it through Google? Was it through Facebook, for example? So we use a lot of behavioral clues to understand the risk in the customer. That really covers his willingness or psychology. But a really big part of lending in India is also affordability, as you referenced. And we believe in this market, having very accurate affordability models is one of the most important characteristics. We are very sensitive about the amount of credit we will ever allow a user to take out. And we really look at his life on a holistic basis, and we try and model what would it be his income and expenses across the entire household. Because you'll find that just looking at one person's P&L or bank statement will not indicate the real affordability scenario, especially if maybe he lives in a different city to his parents, but is supporting them. So we've built a lot of very complex India-specific data models that allow us to predict now with quite good accuracy what is the risk that we're taking on a single customer. Demand is for anything. I would say that a lot of the kind of traditional consumer products have come down in price recently, and that's meant demand has shot up. The obvious one is smartphones. You can now get a very, very high quality, high spec phone with a fantastic camera for as little as 6,000 rupees. And the average price is about 12 to 15,000. Huge demand in that category from people who did not have a smartphone before. Same with TVs. LED TVs have come down in price, so they're very attractive now in ownership for the whole family. And then one area that's really surged in the last 1 year for us has been education. And I think that's a really interesting category. So we started operations in January 2016. So it's been nearly 2.5 years of live lending. We have touched nearly 2 million customers across the country in all different categories. And now on an average basis across all our business, our loss rates are well below 5%. We've been working in fintech in India for about 6 years now, and I think the important thing is things are changing very fast. We might mock it, but we actually have one of the most progressive regulators in fintech in the world right now. A lot of other global regulators are really cracking down on digital lending, and I think we understand the impact that this can make in the economy. So we generally have a lot of respect, and we see very, very exciting new innovations coming from the RBI, especially around KYC, which is now being almost completely digitalized. We're also seeing good regulation around data and data privacy, and we're very happy and welcome to see that because it will create clarity and comfort and trust for the customer. I'll be a bit controversial. Quite honestly, the size of the sector today will not scale, okay? So there's a lot of people talking, there's a lot of noise, but the actual volumes being done are still very, very small versus the size of the opportunity. So my prediction is over the next 3 to 5 years, we will see a huge ramp up. And therefore, what we need to see is a lot deeper architecture and a lot more reliance on technology. What we've seen so far is a lot of nice kind of front end, nice apps, nice websites, but the full stack, the full end-to-end digitalization has not happened yet. There's still a lot of paper-based processes happening and people using Excel. And what we need is to come together as a community, as an ecosystem, and really invest in some of the infrastructure behind the scenes to prevent fraud, improve data security, robustness, and just help the industry scale to the level that it really should.